We got a lot to talk about today with our special guest, and I'm delighted to have with us Chris Versace. He's a financial columnist and equity analyst, and we got a lot to talk about, from corporate earnings. Those reports will be coming out. The employment reports, do you believe them? What is the truth? Debt ceilings, and we'll even get into some of the techie stuff. But Chris, what a delight to have you. Where are we Skyping you in from today?
We're coming in from just out of the nation's capital up in Northern Virginia, Perry. Thanks for having me.
Oh, great. Nice to have you with us today. Well, we're watching all of this. You know, quickly, before I get into some of these other things, was the fiscal cliff a real cliff?
Oh, absolutely it was. I mean, particularly if you look in this region of the country, again, coming outside of D.C., while all the politicians were down talking about it, the reality was that if we had some of those cuts come through, the number of people that would have been let go would have been staggering with the forced cuts, not only from the government programs, but also on the military side as well. There were some numbers saying it would have been, 500,000 people to 800,000 people that could have been let go as soon as January 1st. So there's no doubt that that was a cliff, no doubt about it.
All right. Well, I want to get into some of that, but I guess the corporate earnings are coming out. What's your feeling?
Well, expectations for corporate earnings, which kick off tomorrow with Alcoa. Remember, they historically start the whole earnings process. The expectations have been really kind of ratcheted back. If we look back to what we saw that the companies reported in following the September quarter, they really brought their guidance and expectations in, and that caused a little choppiness in the stock market. And you have to remember, Perry, that ahead of the fiscal cliff, there are a lot of companies, not just for hiring, but also in terms of spending and other things, were probably hoping for the best, but planning for the worst. So I think, again, their outlooks were rather conservative, and that could be a good thing now that the fiscal cliff part of things seems to be somewhat behind us.
Well, we got another one to go to, I guess, the debt ceiling, we'll get to that. But on some of the corporate earnings, Chris, what I have been reading is that the forecast for corporate earnings this coming year may be flat.
I haven't seen that. I've seen probably growth in earnings as a reflection of overall corporate America, which is the S&P 500. Mm-hmm. They're up modestly, nothing tremendous. But again, remember, people were starting to ratchet their forecasts back for the fiscal cliff. And when we start to look at some of the underlying data that we've gotten over the last few weeks, things such as a rebound in the Chinese economy, strong emerging markets, Brazil, Indonesia, Vietnam even, and over the last 2-3 months, our own durable orders inside the U.S. have been favorable, above the expansion line. So that paints, I think, a favorable picture. We've also gotten some favorable outlooks for the housing market from the National Association of Home Builders, and a number of third-party forecasters are looking for a big push forward in auto sales this year, 2013 over 2012. So when we take it all together, I think that there's, it's going to be a positive year overall for the economy. Now, Perry, don't think that I'm saying we'll be growing 4 or 5%. I'm certainly not saying that. But I do think the prospects are there for it to be a little better than last year.
So, Chris, what do you think is driving it? I mean, other than the spirit of entrepreneurialism and people really wanting things to be better, what's really driving what would be considered an increase?
Well, I think it depends on the market. And if we look at both housing as well as auto, we can take a look at probably a scarcity factor, if you will, Perry. If we look at the number of single-family homes available for sale, they're near historic lows. If we take a look at the automotive fleet around the United States, its average age is near 11 years old. That's one of the oldest on record. And then we factor in what happened with Superstorm Sandy, not only to the housing stock in the East, but also the auto fleet in the East. There's some reasons to think that, we're going to see replacement really start to happen now. But, I have to admit, I am a little concerned about the consumer, which was pretty strong last year. Coming out of the fiscal cliff deal, we've got, the payroll tax holiday is gone. And to me, sifting through the December employment report, average hourly earnings year over year in December up just a little over 2%. That payroll tax holiday, that's no longer there, totally wipes out that would-be wage gain. So there are reasons to be concerned about the consumer.
Do you think some of the corporate sideline capital will come back into the system, or is it still going to stay out there?
On the one hand, we solved the fiscal cliff. On the other hand, we still have the debt ceiling to go to. And over the weekend, it seems as if the battle line is going to be drawn about taxes again. And to me, that says that there's going to be a lot of uncertainty until we figure out the debt ceiling deal, whatever it may be. And I do have my own views on that. But I think that's going to keep money on the sidelines, big corporate spending, for at least a little while longer.
All right. So what are your views on the ceiling?
As I said, well, there are two sides of it, right? We need more revenue and we need to cut spending. And I'm firmly in the camp of cutting spending. And, to me, I try to look at, a handful of economic factors to figure things out. And there's one in particular that I think really screams about this one, Perry. That's gross national debt to GDP. And it's at over 105% now. So if we turn around and say we're going to start taxing people again, the question becomes, how will we grow? Will small business be able to add, extra people? Probably not. So where's the incremental growth going to start to come from? Rather, we need to cut our spending.
Well, they tried, but it looks like they kicked the can down the road. And if they raise the debt ceiling, aren't we just worsening the problem?
Absolutely, absolutely. And if the CBOE or the the CBOE was saying that, if we're on the course that we're on, the deficit at the end of 2016 will be north of $20 trillion. I can't imagine how we can let that happen, because if we start to see interest rates creep up, whether it's because the economy is getting stronger or because inflation is showing its head, then we're going to have a real problem, because it'll start pounding that interest. And that will be very painful. Think of your own credit card. Once your rates go up, those payments go up even faster.
All right, so back to the debt ceiling. It's going to be the next big showdown, and it appears that at the moment the Republicans have been weakened by this last go-around, and yet Boehner, after his election, said, I ain't dealing with this guy anymore. What are we heading into with this one?
Well, I think over the weekend, Mitch McConnell said, we're done on the tax side. Nancy Pelosi saying that, again, if I saw the Sunday talk shows correctly, she's saying, well, we're going to deal with more revenue because it's simply not enough. The big question to me is, what is the plan to solve this? And I don't mean to skip the question, but the reality is, if you want the economy to move forward, you've got to provide confidence in Washington being able to handle what we'll call the big things. And as you know, Perry, right now, there's very little confidence for what's going on in D.C. And that, I think, as I mentioned before, at least near term, is going to continue to keep big money on the sidelines.
Yeah, I read this morning the confidence among elected officials in Washington is at an all-time high of 30%.
Yeah, well, it's, I think a lot of people are frustrated. The idea is that, public officials are elected to do the work of the people, and I don't see that they're doing that. So, there's a lot of hope and change, supposedly, over the last 4 years, and I think, sweeping through the last round of elections, I hate to say it, but it looks like people got exactly what they voted for.
Well, Chris, we haven't seen a budget. We haven't seen a balanced budget proposal. I mean, not only are we out of compliance, aren't we unconstitutional by allowing this to happen?
I have to admit, I'm not schooled in constitutional law, so I can't really say that. But if we think of it, the government like a business, right? There's a business that can know exactly how much it can spend, where it can invest, without knowing what its P&L is. It's very basic economics, in my view, Perry. And the reality is that part of the reason that they can't get anything done is they don't know what they have. And that, to your point, gets back to shoring up and getting a budget.
Well, wouldn't that be a good argument, just throwing back at this administration? Where's your budget? Where's your budget? Where's your budget? Where's your budget?
Well, that, or simply saying, there's a lot of talk, oh, we need revenue, we need this. Well, take a look at the GDP to, the gross national debt to GDP figure. It's a very simple metric that, to me, clarifies everything. If you're spending more than you're taking in, there's two things that you can do. You can either cut your spending or figure out how to get, more revenue. But the reality is, Perry, if we look at the number of people that are working in this country, it continues to decline. I think the most recent numbers from Gallup show that only 44% of the population, when you measure employment to population, is working. That's a ridiculous number.
Well, that brings us to the employment report. The administration is championing the 7.8%, but give me a break. I mean, what about the people who haven't filed or even looked for a job?
First off, that's a ridiculous number. And if you look over the last several months, the only reason that number has come down is because of the declines in the labor force. In other words, people are checking out. They're not even looking for work anymore. That's how bad things are for a number of people. And if we look at the actual job creation numbers, December was around 155,000. Guess what? That's exactly in line with the average number of jobs created each month in all of 2012 and 2011. So I ask you, Perry, where's the improvement?
Well, yeah, but how come they're getting away with these reports? I mean, what do you think the real unemployment figure is, Chris?
I think, well, the best unemployment figure for me is underemployment. That takes people who are, measured in the official government statistics for being unemployed, people who have stopped looking for work, and people who can't get enough work, meaning I'd like a full-time job, but I can only find a part-time job. That's hovering around 17%, Perry. Sandbox math tells you that that's 1 in 5, almost 1 in 6 people. That's unacceptable.
Chris, I'm hearing you say that after watching the talk shows over the weekend that the administration says, well, we just got to get more revenue. We got to get more revenue. Well, they got some of the tax increase on the people they wanted. That was a 400,000 plus bunch. So where are they going next?
Well, you have to remember, too, with that payroll tax holiday, that's going to hit everybody.
Yeah.
And I think that over the next, 2 weeks, when people start to open up their paychecks and they see that there's, less money in their pockets as a result, I think people are going to wind up opening their eyes a little bit as to what's really going on.
All right. So they're being hit there, but where are they going to go for next? I mean, what do you sense they're going to go for next?
It's going to be a very, very interesting question. And I say that because the average consumer is already being hit with, not only that payroll tax holiday being expired like we just talked about, but higher food costs.
Mm-hmm.
We talked in the last segment about the rebound in the international economies. That's going to start to drive oil demand, which means higher oil prices, which leads me to think that this, decline that we've had in gas prices since September is probably over for the most part. So the consumer wallet is going to be very tapped heading into 2013. And savings rates are already low. We're starting to see people start to dig back into their credit cards. So, when you push back, Perry, I'm not sure where they think they're going to get this from, because the average American doesn't exactly have a lot of extra money laying around.
Do you have any thoughts on Obamacare? I mean, I know it's law, but there's so many exemptions to it. What do you think is going to happen to this thing?
It sounds, again, I'm not a lawyer by trade, but it sounds as if that it's going to roll forward. And that is going to have some indirect costs on people as well. And again, it just points to the fact that, the consumer is going to have very weak discretionary income unless we can get wages up and get the job market exploding.
So what are you telling your clients? I mean, I've watched Wall Street go all over the place. Today it's in red ink. What do you see happen? Where are you telling people to go for investments?
So the way that I look at the world is really according to power trends. And the newsletter that I write, Power Trend Profits, talks all about the power trends. So the first question, Perry, should be, what are power trends?
Right.
And power trends it's the intersection of economics, demographics, psychographics, mixed in with some other things, such as evolving technology, for example. And we've got about 8 great power trends that we look at: always on, always connected, living longer lives, scarce resources, and about 5 or 6 others. And by pulling all these pieces of data together, we can start to identify longer-term areas of investment. And by that, I mean not something for, I can buy it today, sell it at the end of the week, but something that people can buy and hang around, 6, 12, 18 months and sleep well at night, because that's what I like to do. I like to sleep well at night.
CES in Las Vegas is underway. Do you think that's kind of an indicator? I mean, what comes out of that show is an indicator where some of this technology is going?
Yeah, it is. And I think we need to remember that it's an industry event, and there tends to be a lot of major announcements there. But the products that we tend to see ship, 6, 9 months later. Because remember, the vast majority of electronics, be they TVs, smartphones, tablets, whatever else there is, tends to be shipped in the back half of the year. But having said that, I recently spoke with Gary Shapiro, who heads up the Consumer Electronics Association, and he was telling me about 3 or 4 really hot areas, one being Ultra HD TV, mobile health, meaning we have all these smartphones and tablets out there now. Let's talk about ways that we can keep track of and improve our health. The third, which was a little surprising to me, was in the automotive arena, but that really talks to greater integration with smartphones and tablets with the infotainment systems that are in there.
What's the deal with GM working with Apple?
That, I got to tell you, that was a unbelievable comment that came out of my Power Talk with Greg Martin of GM. And we were talking about a number of different things regarding GM, everything from the bailout to how they're turning their entire portfolio over to the tune of 70% this year, to some new things that they're working on. And one of them is working with Apple. And what they're looking to do is to bring Apple's Siri voice navigation system into the infotainment unit on a number of their new cars that are coming out this year. That, to me, is pretty powerful when you start to think about how many people are having accidents or, God forbid, deaths over texting, checking email. So the ability to do that all by voice, I think, is pretty interesting. But for Apple, it just talks about another ecosystem where they're really doing some great things. You know, we can talk about iTunes, we can talk about Passbook, the smartphone or the tablet. But here again, moving Apple into a market that not a lot of people are expecting, automotive.
What will that do to the PC people? I mean, they get to be a little ticked off over that one, wouldn't they?
The PC people, HP, Dell, they've seen, in my view, better days. The reality is that we're seeing a number of substitutions towards tablets. There's a lot of people out there who do not need a PC for the type of computing, quote unquote, that they're doing. And that could be everything from reading a book to answering email, surfing the web, that sort of thing. And the other group, too, Perry, that's starting to take it on the chin, if you will, is the e-reader market. So we could talk about how tablets are also impacting Barnes & Noble in their Nook, or even Amazon in their Kindle.
Yeah, I mean, when you can download it on your iPad and read it, why not?
Well, the great thing about the Amazon Kindle software is you could download it, obviously, on your Kindle, but you can download the app and you can put it on your tablet, you can put it on your smartphone if you want, or you could put it, if you still have one, on your desktop or your notebook computer.
Well, Chris, this is fascinating. People that want to get your newsletter, what do they do?
The easiest thing to do is to go to chrisversace.com. That's C-H-R-I-S, V as in Victor, E-R-S-A-C-E.com. Or they can check me out on Twitter at _Chris Versace. I can answer all sorts of questions there as well, Perry.
All right, thank you, sir. We'll have you back. Thanks for your time today. Fascinating information. And let's see where this debt ceiling argument goes. Love to have you on right after that and see what your comments are.
I'm happy to come back. Thanks a lot, Perry.
All right, see you, man. Have a great day. God bless.